Hi there, I just thought I'd take a few minutes to discuss how I go about Dutching a race with a view to trading it in running. Well, first off, I'd be looking for horses that are likely to shorten. So I'm looking for horses that have a history of shortening in price. I am looking for horses that have a reasonably good form record over the past 3-4 races. Ideally, I'm looking for runners that have placed in their last few races. Now that will vary from race to race and so on. And to look at that, I'd use the Timeform site, and that's a site that you should be familiar with. But there's also other things I take into consideration, and that is the prices available. And this is why I'm looking at the first race at Leopardstown today, because it's got a good spread. You'll see the market reckons that the winner's going to come from one of these two. The next two have a reasonable shout, and then for all intents and purposes the bottom half of the market is being ignored. So there's a number of things that we should consider. If you look at the form figure there, fourth from the bottom, you'll see that most of these horses actually haven't run very often. So the form figures are difficult to use in this particular race. But you'll see the market there in the past two runs, this particular run has been first and second. We've got a winner there, next one's been second and the only run he's had, and then we've got a 4-3-1 and so on. But I'd be tempted to ignore these. Generally speaking, in a race like this, I don't Dutch the first two, although the market thinks that's where the winner is coming from. Keeping in mind, I'm not looking to Dutch this and let the race run through to its conclusion. And the reason for that is, sorry, let me switch on simulation mode because I'm going to be chopping and changing the numbers and I don't want to put money in the market. So let's imagine that we Dutched these two. You can see here that if we let the race run through to its conclusion, I would profit £18. Now, generally speaking, when I'm Dutching with a view to trading, I'm looking to make 10 to 20% profit on my original stake. So in this case, I'd be looking for £10 ideally. Now, the problem with this is I'd need to let the race run pretty far in before the numbers were such that I was far enough in the green to achieve my profit. In other words, and that's true even more so if there was a short price favourite, an odds-on favourite here. You'd find that you'd actually have to let your Dutch just carry on through to the finishing line before you could actually trade out. So that's why I tend not to do the short price favourites. Compare that to, for example, the next two that the market thinks might have a chance, and all of a sudden you'll see that because of the odds are up here, we've got 200 quid to play with. Now that's important because that means that to achieve £10 on our £50 overall stake, there's a fair chance I'll be able to trade out not long after halfway round. And the same argument applies if we were to go to the other runners. So even if I Dutch the bottom half of the field, you'll see that I've got 400 quid to play with. Now, of course, what that means is that I have all this money to play with, but the chances are these horses aren't going to shorten. They're not likely to win the race, but they don't need to shorten that much in order to gain the profit. Let me just remove him. The only reason for doing that is so that I can get 3 ladders in. Okay, 25 is not being taken. Let me just move that, just for the purposes of this exercise. Okay, if I go to the ladder, we've got Chatham House, Le Trait de Chauncey, I think that's how you pronounce it, in Prussian Eagle. Chatham House has got 25 quid on it, so it needs to recover £25 roughly. In order to recover £25, it's got to drop in price in running all the way down here. So it's going to drop from 25 down to 11.5. Similarly, these runners here would need to drop the corresponding amount. What you'll find is that they have to drop from where they are just now to much the same sort of price, 11.5. So you'll see they've got a lot to go. But doing it that way isn't really representative, because that's essentially the position that you need to be in if you were letting the race run to its conclusion. In other words, two of these runners will have shot out to 1,000. However, during the race, one would hope that all of your runners are shortening in price, but let's imagine two of them aren't. They're still running, but they're not. The market doesn't think they're in contention. So let's imagine that these prices went out so that the odds doubled. So if this went out to 80, for example, it would be losing, if it was traded out, it would be losing £7. If this went out to 150, it would be losing £5. So we're looking at, let's say, losing 15 quid. So in other words, this thing here doesn't have to recover £25, it only has to recover 15 in running. Right? Now, that's just to get us to a break-even point, if you will. Compare that to, let me just switch simulation mode on and off again, that'll clear the numbers. Compare that to the front two in the market. If this price here went out by, doubled in price, so let's say it went out to 7, it's losing £11. So Calcare has to make up £11 to get us a scratch race. And you'll see how far it has to go down. It's got a lot of ticks movement to make in order to get us to a scratch position. Now, in all likelihood, in a race like this, both these runners will edge down at the expense of everything else. But my point being here is that the short price runners, if you're dutching those, they have to make up a lot more ticks in running in order for you to get to a profitable position. Ideally, what you want to do is to trade these two in terms of their odds. Their odds are ideal for that type of trading. However, what we need to do, again, let me just go into simulation mode. What we need to do is investigate whether these are likely to shorten in price. So we've identified the two runners that we want to get involved with regard to their odds. How do they look with regard to their performance? Well, Petit Parisien has only had one run, but it's been second. The next one down has been 4-3-1. So that's actually not too bad. I don't mind that. I'd be prepared to go with these two, keeping in mind that in all likelihood one of these guys are gonna win. So for this particular race, I'd be looking at those two. But that's the type of thing that you should be looking out for. What I'll do, we've got half an hour before this race. I'll pause the video and we'll come back and have a quick look at that race and see how we go with those two runners. Back shortly. Okay, back again, and we've just headed off, and you can see that the odds for two picks here have shortened from when we looked at it half an hour ago, so it's not so good. And I'm without pictures today. My broadband is somewhat marginal normally for pictures, and today it's particularly bad. So I'm using William Hill Radio as a judge. But as you can see, we're already up to £7. We're nearly at a 20% profit. Well, I'll take that. Thanks very much. And that was it. That was quick. I didn't expect it to be quite as quick as that. But that was a very good demonstration. Thank you very much. I wish it would all go like that. Just to recap, by choosing these runners here, you end up with much more money to play with in running. Now, if you set yourself a target like I did of roughly 20% of my overall stake, so I was looking for £10 profit in that, and you can see with very little odds movement, indeed one horse traded out for scratch and the other horse had dropped to 6.6 from 10. Now it'll be worthwhile just carrying on watching this race to see how well these do. If your risk assessments are such that you want to hold on for longer, there's plenty of time to stay in the market. And you can see in this particular case, both these runners are trading below their SP. Okay, so if I'd held on another 60 seconds, I could have got a lot more profit. But that's not the purpose of the exercise. The longer you hold on, the bigger the risk. So go into the market with a predefined exit point, what sort of profit margin you're likely to look for. The next thing is, you might say, well, what is your exit point? To be honest, I don't use an exit point. I find that I am successful enough, in other words, my profits, the number of times I profit, outweighs the odd occasion where I burn my £50. Too many times when I've done this early on, when I was practicing, learning how to do it and so on, too many times I found myself in the red and I would trade out for a 50% loss, only for one of my runners to come charging in and come pretty damn close to winning the race if it didn't win. And so in the end I decided to change tack and go into the market with only the amount of money that I am prepared to lose. And of course that's a very important rule that you should have anyway when you're gambling trading. And it works quite well for me. So we can see the one that scratched early on is running very, very well. One of the outsiders, Prussian Eagle, has come down from 103. And there's one of my picks looking like it might win. There you go. A winner from one of my picks. So if I left it, I could have had £170 profit. But that's not the point of trading, of course. I hope that clarifies some of the things that you should be looking for. I'll try and post up some more Dutching with a view to trade examples later on this month. Thanks for watching.